nagkaroon na ako ng technical difficulties. But I think we can begin. So, just as taking a step back, I know medyo challenging yung last two topics natin. So, ang pampalubag loob naman is equity is more straightforward. So, it's very similar to our very first lecture. As in, just know how to account for it in terms of journal entries and everything should be okay. So, equity should be equally straightforward. So, actually, we'll just have a very quick lecture for today. And then, just to adjust everyone's pace para hindi na tayo masyadong ngarag, yung last supposedly topic would be cash flows. Rather than parang forcing us to learn it quickly and then medyo mahirap cash flows, I defer it na lang after. So that's for the final exam na lang. So this is basically your last topic for Module 2. So basically, the idea here is that kindly make sure that we've mastered equity. And then by now, dapat we've learned na from like the past two quizzes for PPE and liabilities. And then that should be enough preparation for your Module 2 exam. So what will happen in terms of our schedule? So we'll have 3 sessions for equity. So today we'll have the lecture. The second lecture will be about the problem set. So just answering it together. So, already heads up, sa OBLE, basically ang ina-ask lang would be figures. In the quiz, the expectation is you know how to create journal entries. So, basically ang gagawin natin is sa OBLE, just make sure na you know what are the proper amounts. In the face-to-face lecture on Tuesday, we'll learn about the journal entries for equity. And then on Thursday, we'll have our last quiz for accounting 1. So that would be on Thursday. And then the last 2 sessions would just be for review. So review, just so that everyone's aware, I won't be able to post the answer keys for the quiz. Instead, what we can do is redo all of the quizzes in the last 2 sessions. So how do we make the most out of it? Please bring a yellow sheet. And then parang basically that's the only time during the 2 sessions that you can re-answer the quiz together in class. So, in terms of expectation settings, basically the problems that you can expect in Module 2, super similar lang siya dun sa quiz. Hindi siya more difficult. It's more of like testing whether parang you've learned the idea behind the different concepts for Module 2. So, before we begin the recording, do we have any questions, clarifications, housekeeping, admin? Okay. So if none, let's go into our last topic for Module 2, which would be accounting for equity. So going back, tapos na tayo in the two major segments of our accounting equation. We're done with our assets, both current and non-current assets. And then we just finished liabilities in terms of both current and non-current. So finally, we're gonna be completing our picture by taking a deep dive into equity, right? So that we can really create the whole picture that everything that you own, basically your assets, has to come from somewhere, right? So either it's liabilities from third parties or put up by owners or different shareholders in the form of equity. So the most basic and simple definition of equity is that it's residual interest, meaning that you subtract your assets by your liabilities, and therefore that would be your equity, right? So equity in its purest form is just the things that are put up by the owners in that particular entity. Now, ano yung complication? So, parang why are we revisiting this if it's really straightforward? Well, going back to our initial lecture, accounting is only as useful as the users or the entities that use them. For the first half or the first module, what we were focusing on will be sole proprietorship. So madali lang siya. It's just comprising one owner. Whatever you put in, whatever you take out, ang isang account lang yung under the equity. You call it owner's equity, and then of course you'll have your owner's drawings. Pero technically, madali lang siya to account for. Now, what we'll be focusing on in Module 2 is how do corporations actually record their equity, right? It's more complicated because, corporations have at least 5 owners. So, they have what you call your incorporators. So, sila yung gumawa ng corporation. And the general idea behind this corporation is, I want to put up a lot of capital. And how do I put up this capital? By issuing shares to my company. So yung shares, pag bumili ka nun, you'll be actually a shareholder, which would be make you a part owner in terms of the particular venture or corporation. right? So now, what we're gonna be doing is taking this simple concept of owner's equity and now advancing it to how corporation sees them through what we call shareholders equity, right? So, bago kayo parang, before we deep dive, if ever mawawala kayo sa lecture in terms of like the different complexities or scenarios or nuances in each of the examples, the general idea is this. Total shareholders equity is divided into two things. The capital that you're able to raise through what you call your capital stock, and then the earnings that you're able to generate with your business or your corporation, or what we call our retained earnings, right? So you have your capital stock, which is basically the capital that you're able to raise, and retained earnings, or basically the profits or the margins that you're able to generate. And then of course you have other comprehensive incomes that will affect shareholders' equity. But since this is a basic accounting class, I just want us to focus in the two major classifications. So now that we're clear, let's go into understanding the first concept, which is capital stock. So what are stocks, right? So the idea here is this. In the Philippines or even in other countries, a corporation is separate from your owners. So you have your corporation here, and then basically the idea is they have a separate legal or juridical entity that is different from their shareholders. So iba yung entity ni company kay shareholders. And here in the Philippines, they're governed by what we call the corporation code. So if you want to start a corporation here in the Philippines, what you're required to do is to have this thing called Articles of Incorporation. So it's very legal in the sense that you will put up ano ba yung mga bylaws, ano ba yung mga mission and vision nyo. But for the sake of accounting, one of the more important components of that will be included in your Articles of Incorporation would we be called our capital stock. So the idea here is that what is your parang initial valuation for your company in the form of what we call your authorized share capital, right? And then ang gagawin mo is that for you to be able to raise that money, you want to divide this authorized share capital into what you call different shares or in the form of certificates. So for example, I'm creating a corporation. I will put in my articles of incorporation when I apply to the SEC that my corporation has an authorized share capital of around 1 million pesos, right? So the question is, who puts up that 1 million pesos, right? So ang gagawin mo is that you will issue them in the form of shares, right? So the most common is what you call shares that have par values. So a typical par value or for this particular example would be 100 par value, meaning isang share certificate 100 pesos siya, right? Or let's say 1,000. So if I want to raise 1 million with 1,000, in total I will have 1,000 shares, right? So to raise the 1 million, I need to issue 1,000 shares to worth 1,000 pesos each to different owners. So whenever you're an investor, syempre, if you like the company, you'll be able to buy more. So yung percentage of ownership mo depends in terms of the number of shares that you're able to buy. So that's the most common example. That's par value. So the reason why it's called par value is that in the articles of incorporation, nakalagay na yung par value. Right? So, meaning, I'll create this corporation, our par value is 1,000. There are some corporations, however, na hindi nakalagay yung par value nila in the articles of incorporation. So, ang mangyayari is that instead, they will have what you call their stated value. So, the difference lang is yung par, naka-enshrine siya sa articles of incorporation, while no par shares or stocks are those that are not specified in your articles of incorporation. Ano yung general rule? In the Philippines, bawal ka mag-issue ng stock that's less than 5 pesos. So it has to be 5 pesos and up, right? So that's the general idea. For this particular scenario, there won't be trick questions. We'll just straightforwardly say kung ano yung par value or stated value, whichever the scenario is. The difference is just slight for par and no par, but we'll get into that into the different slides, right? So the idea here is that, okay, we have this idea that you're putting up a company. For people to be owners, they have to buy shares. And for them, what they're called are your shareholders. And the idea here is that pag nag-release ka ng shares, people can subscribe to it, right? So I want to subscribe to it. When you subscribe, technically hindi mo pa siya binabayaran. Parang you're technically just quote-unquote reserving it. When you fully pay the share, that's the only time that they'll issue it. So for example, they're selling 1,000 shares or stocks for 1,000 par. And then what you'll do is, okay, I kind of want to subscribe to 5 shares, right? So that's worth 5,000. Technically, when you subscribe, wala ka pang binabayarang pera dun sa company. At that point, ang matatawag mo dun sa 5 shares na yon is what you call subscribed shares. At that point, hindi mo pa ini-issue to the owner. So technically, when you think about it, it's in the corporation side. Only when they fully pay is that the time that you will call it issued capital, right? And that would be in the form of either money, property, or services. So if you're interested to be a shareholder, there are various ways in order for you to buy ownership from the company. Either bibilin mo money straightforward, either you'll issue property, or even you'll conduct services on behalf of the company. So let's look at this simple equation just so that we understand how it works. So we have two corporations, Corporation A on the left and Corporation B on the right. Both of them have authorized share capital of 4 million pesos. The first thing I want you to understand is how do you get the number of shares that's related to each corporation. And it's actually very simple. Kapag par value, meaning it's 100 yung par value per certificate, all you have to do is divide 4 million by 100. And therefore, for Corporation A, they are authorized to be able to issue around 40,000 shares. On the other hand, you have Corporation B. No par sila, meaning in the Articles of Incorporation, wala silang nilagay na par. But their stated value is around 40. So instead, Corporation B can issue 100,000 shares. So basically, that's the first thing that I need you to understand. So with your authorized share capital, you just divide your par value or stated value so that you know the number of shares that you're able to issue. So now, how does the subscription process look like? So in the book, you'll see that there are different methods. For us to simplify the process, we will follow what we call the memorandum method, right? So the idea here is this. First step is that magpa-file ka, diba, ng Articles of Incorporation. Now, you will have what you call your authorized share capital or the total amount of capital that you can issue to your shareholders. Now, mangyayari dyan in step 2, magkakaroon ka na ng mga owners that want to subscribe to your share capital. So the first journal entry would be, you will debit subscription receivable, meaning this is the amount of money that you expect to receive because they subscribe to your share capital. And then you'll have what you call your SSC or subscribed share capital, right? Next is, syempre, dahil may receivable ka, for you to issue it, you'll collect subscription receivables. So basically, in order for you to recognize the subscription receivable, what you'll do is you'll have to receive cash. So the second journal entry would be, you'll debit cash, credit subscription receivable. And then finally, to end the subscription process, for you to finally be able to issue your shares, they need to, so pag fully bayad na yung subscription receivable for each of the shares, you will then de-recognize your subscription SSC, and that's when you'll fully recognize what you call your share capital. So, in the lectures and in the examples, wag kayong malito. Share capital is one of the terms. I prefer using CS or common stock, right? So I usually just write CS. And then for subscribed share capital, SSC. Sorry, medyo tinatamad ako to spell it out. But in the quizzes, in the exercises, you can also follow the shortcuts, right? So share capital is generally what we call common stock. Later, we'll talk about different kinds of stocks. But for this particular scenario, share capital can be called common stock. Right. So let's look into how this works. So an entity was authorized to issue share capital of 4 million. The reason why it's called memorandum approach is that yung authorization, ang gagawin mo lang is a memo. So walang journal entry. The first thing that you will recognize is when you receive a subscription to 10,000 shares at par, right? So yung par value niya was at 100. So basically, all you have to do is, okay, they want to subscribe to 10,000 shares. You multiply that by 100 par, then therefore, ang amount of subscription receivable that you expect to receive would be debit subscription receivable 1 million, credit SSC of 1 million. The next step is that not everyone will fully pay the subscription receivable. Sometimes they will pay in tranches, right? So for this particular example, they collected 25% on the above subscription. So if 1 million in-expect mong total subscription receivable and you only receive 25%, then you just multiply 25% by 1 million, you'll get debit cash, credit subscription receivable. Right? So gets pa so far. Now, third, you receive full payment to 6,000 shares. So dito na yung medyo slight complication. Remember, this 1 million refers to how many shares? 10,000, right? And this particular 250,000 payment refers to 10,000 shares. So what we have to do first is to prorate 6,000. So meaning, yung 6,000 na to, right? So full subscription of 6,000 shares is equal to, technically, 600,000. Makes sense, right? For them to be able to fully pay, kailangan maka-receive ka ng 600,000. But going to the second journal entry, you know that may 25% down payment na out of those 6,000 shares, right? Specifically, out of this 250,000, 150,000 of that was already down payment for the 6,000 shares. Make sense? Kasi, di ba, down payment to for 10,000 shares, ilan yung down payment for the 6,000 out of this 250? It's 250 times 6 out of 10, you'll get 150,000, right? Or another way is 25% of 600,000. So for them to be able to fully pay the 6,000 shares, 450,000 na lang yung kulang from the 6,000 shares, right? So nag-down pay na sila ng 150. This is part of the 150. So this 250 can be broken down na 150 down payment to the 6,000 shares, another 100,000 for the 4,000 shares. So ang butal na lang for the 6,000 shares would be 450,000. So at that point, 6,000 shares are fully paid. And once they're fully paid, they will now issue the share certificates. And therefore, the last journal entry here would be, we will debit subscribe share capital, so bababa to, ng 600,000. And then you will finally recognize your share capital or common stock or CS by 600,000. So the process looks complicated, but the idea here is for you to be able to get your total shareholder equity. So in this final scenario or transaction, nagkaroon ka raw ng isa pang issuance of 5,000 shares. So here, rather than subscribing, you have 5,000 people, you have people that are willing to pay for the 5,000 shares directly in cash. So therefore, kung cash, then all you have to do is 5,000 shares times 100 par, so 500,000 share capital of 500,000. So kindly note, these 4 journal entries refer to the 10,000 subscribed shares. Nagkaroon ka lang ng complication in terms of how they are able to pay the subscription receivable. Journal entry 5 refers to an extra 5,000 shares. So at this point, what happens is, meron kang 11,000 shares that are already fully paid and issued, and then meron kang remaining 4 that's partially paid and still just subscribed. Right? So putting that all together, the question naman that we'll typically ask would be, number 1, what are the journal entries for the particular transaction? And number 2, how much is your total shareholders' equity? And this is where we will enter the level 1 shareholders' equity equation. So, the general equation lang is how much yung na-issue mong share capital. So, issue meaning ilan yung fully paid and issued already. So, this will represent the 11,000 shares. We will add the subscribed share capital. So, ilan ba yung extra nakasubscribe, right? But we will subtract the subscription receivable. Makes sense. This is what I was able to put up, right? Issued share capital. Naka-raise na ako ng money. The second portion is, okay, meron akong possibility of earning extra subscribed share capital. But I have to subtract it from the amount na hindi ko pa nare-receive. So for example, in the particular scenario, so isa-isa na lang natin para madali. In the particular example, let's first go to issued share capital. The issued share capital would be the 600,000 for the 6,000 shares that are fully paid and issued, and the 500,000 that were extra paid using cash. So your issued share capital would be 1.1 million. Next is, ilan na lang yung natira nating subscribed share capital? We started off with 1 million, pero dahil yung 600 fully paid na, technically our subscribed share capital is 400,000. So on top of that 1.1 million, meron ka pang 400,000 na technically mababayaran rin naman within the next few months, right? However, in order for you to know your total equity now, kailangan mong bawasan to by the amount that they've actually paid for, right? So, yung subscription receivable represents the unpaid portion, right, of the 4,000 shares. So at this point, yung subscription receivable mo starts at 1 million, pero nabawasan mo siya ng 250 and 450. So this 300,000 represents the 75% na hindi pa nababayaran for the 4,000 shares. Kaya hindi siya na-issue, right? So therefore, the basic idea here is 1.1 million of issued share capital plus yung subscribed share capital, pero babawasan mo to the amount na hindi pa sila bayaran, which is basically represented by your subscription receivable. By putting all of that together, ignoring yung retained earnings, yung shareholder equity mo from your capital stock will be 1.2 million. So, what you need to master would be two things for this particular lecture, for this particular section. How do you journalize, particularly yung complications when it comes to subscription receivable? And then second, how do you get your shareholder equities if you know your issued share capital, your SSC, and your subscription receivable? Right? So, the answer would be 1.2 million. Right? So, this is level 1 of our shareholder equity. Any questions, clarifications? So if clear, we can now go into the next topic, which would be, okay, why would you want then to be a shareholder? Like, why go through this hassle process of owning shares? It's because you have 4 rights as an owner. If you're a shareholder to our corporation, you can share in the earnings, you can vote in the election and how the corporation is run, you can have the right of what we call preemption, so that you can subscribe for additional share issues kapag na-authorize sila additionally. And you can get the share in the net assets of the corporation upon liquidation. So, honestly, we're only gonna be lightly touching upon this topic, pero I want you to be aware that in capital stock, there are 2 types of owners. You have your ordinary shareholders and preferred shareholders. The idea is the same. So you will have CS and PS, but the idea is still the same. Ano lang yung difference? If you're a preferred shareholder, you will just have preferred claim on the dividends, and you'll have preferred claim on liquidated assets, and you will have a fixed return on investment. Yun lang yung difference niya in terms of ordinary share capital. So usually, an example of this would be a 12% PS stock for a 100 par, meaning every time meron kong 100 par, the dividends that you will receive will be equal to 12. Generally, I just want you to know that there's a distinction lang between the 2 classes, right? So you have your ordinary share and your preferred share. So sometimes you will see na dalawang line items. Yung capital stock is broken down into CS and PS. That just shows the amount that is referring to your common stock or your preferred stock. Right. So now, we now go to the issuance of share capital. So we're done with the subscription process. How are shares issued, right? So sometimes, yung shares, they go beyond or above the par value. What do I mean by that? Kuwari, I'm selling 100 shares at, 1,000 shares at 100 par. Sometimes, people will be able to buy it or you'll be able to sell it at 200 pesos, 300 pesos. The excess from the par value is what you call your share premium. So anything that's more than your par or stated value is what you call your share premium. In the same way that bond premium works, right? So, what does it do? Basically, you'll just have a compound journal entry na, okay, naka-receive ka ng cash that's more than your par value. So, yung ordinary share capital will always be credited at par. Anything in excess of that, you will credit share premium. So, or basically, the way I will write it in the future will be cash CS for common stock and CS APIC, additional paid-in capital. So the reason why it's called APIC is that for example, for that particular scenario, 100 lang naman technically what you had to pay. But you gave additional paid-in capital to be able to buy those shares at a premium. So for this, let's just look at the two examples. Let's say you receive 110,000 cash for 1,000 shares, right? So, first scenario is at a company that's a par value of 100. So, yung journal entry nito would look like this. So, don't get intimidated in the compound journal entry. This is the step-by-step process on how to do it. Step 1, how much were you able to generate? You debit your cash by the amount that you received. So, 110,000. Step 2, you credit your CS by multiplying the number of shares that they bought at par value. So 1,000 times 100, you'll get 100,000. You'll notice there is a missing credit. That missing credit, you will just recognize as additional paid-in capital with CS APIC at 10,000. So same strategy when it comes to your no par value. Ano lang yung difference? Sa no par, rather than multiplying at your par value, what you will multiply the number of shares would be at your stated value. So, step 1, again, debit the cash that you were able to receive, 110,000. Step 2, credit your capital stock by the stated value times the 1,000 issued share, which would be 40,000. Yung excess credit, the difference between 110 and 40, represents your APIC or your additional paid-in capital. So this is what we call your share premiums, right? So basically, that's how it works. Now, you'll wonder, paano sir kung nagbenta sila below par? Well, buti na lang, the SEC prohibits selling shares at a discount. So kindly take note though na this only refers to the original issuance and not subsequent transfers. So later, we'll talk about treasury shares. Pero the general idea is that in the original issuance, you cannot sell shares at a discount. Kailangan premium lang palagi. So, the next step is, paano kung instead of cash, yung gusto nilang pangbili ng shares, they will give you non-cash consideration. How then do you value the particular transaction? So here, this is where medyo kailangan nyo lang i-memorize the valuation property. So when we say non-cash, rather than paying for a stock with cash, I will either issue a land or gagawa ako ng service. The question is, ano yung i-debit mo? It will follow this valuation hierarchy. Pag meron yung fair value of the non-cash consideration received, we will value it here. Pag wala to, then you go to second priority, fair value of the shares issued. Pag wala yun, the last scenario would be par of the shares issued. So, let's look at an example. An entity issued 10,000 shares of 100 par value in exchange for land. The question that we're asking for is, how do we value the land? How much? Alam natin that the journal entry would be debit land, credit CS APIC if merong excess. The question is, how much should we debit land? Step 1 is to follow the valuation hierarchy. So, titingnan nyo muna first, meron bang fair value of the non-cash consideration? In this scenario, meron. 1.5. So, pag meron na yung first priority, automatically, you will value it as such. Right? So, if this is the fair value of the non-cash, we will debit land at 1.5. Again, the next step will be credit your common stock or your CS by the par value. So, the par value is 10,000 shares times 100, which is 1 million. So, ano yung missing credit? Anything that you paid in excess will be credited to your CS APIC. So, basically, that is how you account for this particular scenario. So, this is our scenario 1. Scenario 2 is, paano kung hindi nakabigay yung land fair value? Pero, meron kang fair value of shares. So, you go to the second priority. So, now, we will value it at 180 times 10,000 shares. Land will therefore be valued at 1.8 million. Again, i-credit mo lang yung CS at par. So, that's 1 million. So, now, instead of 500,000 yung APIC, it will now increase to 800,000. Right? So, basically, that's how it works. And then finally, last scenario, paano kung hindi binigay yung fair value of land or fair value of the shares? All you have to do is issue it at par. I will value the land at the par value of the shares. So meaning, the land will be 1 million. And my CS is 1 million. So walang butal. There is no share premium in the final scenario. So basically, that's the idea of share premium. The next concept is that when you issue shares, sometimes you will incur costs. Magkakaroon ka ng printing of stock certificates, you will underwrite, you will have accounting and legal fees. The idea here is that this share issuance cost should be a reduction in your equity. So, meron lang two cases. How do you treat the share issuance cost? Kapag may existence ka ng share premium, so if the corporation has share premium, yung share premium muna yung babawasan mo. So, CS APIC or share premium, credit cash. Pero kung wala, you will recognize it as an expense or as a loss that will directly lessen your retained earnings. So, how does it work? In scenario 1, meron tayong existing share premium of 300,000, right? So, step 1, meron ba tayong share premium o hindi? Meron, 300,000. Next step is, magkano ba yung share issuance cost? It's the 25,000, documentary stamp taxes, and the publication fees of 200. So, in essence, yung 225 is your share issuance cost. Rather than treating it as an expense that will affect your retained earnings, ang gagawin mo lang is babawasan mo yung share premium dahil meron kang additional paid-in capital. So, 225,000, 225,000. However, pag may naka-encounter kayong problem na wala yung share premium, wala siyang share premium at all, rather than debiting share premium, you will debit RE under share issuance cost. So these are just things that will affect the balances of your APIC and your retained earnings. Right? So at this point, we will now finish shareholder equity level 2. Ano lang yung dagdag? You will now have the idea of, okay, we know issued share capital. It's in the form of capital stock. We have APIC CS or the share premium. However, kindly take note na pag may share issuance cost, kailangan bumaba yung share premium by that amount. And then you'll have subscribed share capital and subscription receivable. So now, just to ease your worries, we won't have overly complicated examples na meron kayong share issuance cost and share premium. tapos meron pa kayong SSC and subscription receivable, we'll just minimize it to the way that you treat each and every separate transactions and entity. So the last concept, before we end our capital stock, is that I want you to familiarize yourselves in the idea of legal capital. So the idea here is this. Kapag nag-invest na yung shareholders sa isang corporation, they will treat it as a trust fund for those investors. Meaning, bawal mong ibalik yung capital nila sa kanila through dividends, etc., etc. Because technically, that's their initial investment to the corporation. So, legal capital refers to the portion of your shareholder equity that you cannot return to your shareholders. So, the next question would be, how much yung legal capital? The legal capital is the aggregate par value of any of the shares that are subscribed kahit hindi fully paid and any of those that are issued. Hindi kasama yung APIC or share premium kapag par corporation. Pero pag no par, anything that's above the stated value will be legal capital. So again, in the similar slides, it's hard to understand with this theory. It's better to digest with an example. The next question lang here would be, how much is the legal capital of Corporation A and Corporation B? Going back to the theory, your legal capital refers to two things. The aggregate par value of your issued shares and your share capital. Hindi kasama si share premium. So for this instance, we will only get the 1 million and the 300,000, and that will make your legal capital 1.3 million. On the other hand, for no par, we will include the following. The issued share capital, the APIC that's stated above the stated cost, and the subscribed share capital. So technically, ang difference lang nila is that yung legal capital ng no par is harsher than the legal capital dun sa par value because they will include your share premiums. So the legal capital here is 1.8. So again, if I ask you, how much equity can the corporation, what is the equity prohibited from distributing? The answer is, Corporation A, they're prohibited from giving back 1.3 million, which represents the par value of their share capital and subscribed share capital. And for the no par, it's 1.8 na may kasamang APIC for this particular scenario. So these are your types, a portion of capital that cannot be returned. Right? So again, aggregate par value. So now, that's basically the first major chunk of our capital stock. The second chunk would be what we call treasury shares. So before anything else, any questions or clarifications for yung capital stock? None. Okay, so next we go to treasury shares. So what is the idea of treasury shares? The idea here is that there will be moments na companies will be able to issue the stock, but then at the end, what they'll do is they'll buy back the shares. So basically, what they're doing is they're reacquiring the shares, right? And then they will then either reissue it, right? So that's the concept of treasury shares. Treasury shares are those that have been originally issued, pero ni-reacquire ni corporation pabalik. So there are three requisites for it to be considered a treasury share. First is, the corporation must buy its own entity shares. So meaning, if I'm Corporation A, I need to buy back the shares that I issued under my name. If I buy shares from Corporation B, which is a separate entity, that's not a treasury share, that's an investment to another company. Second is that the shares must have been issued originally, right? And third is that they are reacquired, very hindi mo kinancel kaagad, right? So now, we will advance our shareholder equity equation into three. Meron ka ng treasury shares here. And then we will also include retained earnings. However, just to simplify everything, like what I've mentioned, yung subscribed share capital and subscription receivable, the only time I'll make you encounter them is in the similar example as our very first. So in the other concepts like share premium or like treasury shares, don't worry, hindi ka naman kayo papa-journal entry. So for simplicity's sake, our level 3 will just focus on CS, Apex CS, treasury shares, and retained earnings. So yung retained earnings, mamaya pa natin i-discuss. Pero meron siyang may importante lang tayong point on treasury shares. So the idea here is that bakit ko sinama yung retained earnings while we're focusing on capital stock? It's because your retained earnings is restricted to the portion of your treasury shares. Meaning, when I ask you, what is the total amount of treasury shares that a company can buy from its original issuance? The answer will be up to the amount of your retained earnings. Right? Up to the amount of your retained earnings. So yung 2 million, ang ginawa nila in period 1 is that they acquired 600,000 treasury shares. So now, ang mangyayari is that 600,000, a portion of this 2 million, will be restricted to the treasury shares. So naka-restrict siya dun sa treasury shares. So the question is, in period 2, how much of the retained earnings can we use to be able to buy more treasury shares? The answer would be not the 2 million already kasi 600,000 is tied up, but only the unrestricted portion of the retained earnings. So the idea lang here is that step 1, or again, major concept number 1, you can only buy treasury shares up to the amount of your unrestricted retained earnings. In period 0, before you bought the treasury shares, meron kang retained earnings of 2 million. So yung max amount of treasury shares that you can buy is 2 million. In that particular period, you got 600,000. Yung 600,000 na yun, it effectively lessened the amount of retained earnings that's unrestricted by 600,000. So at the end of period 1, you have 1.4 that's unrestricted. So the question is, in period 2, ilan total treasury shares yung potentially you can buy? It's not anymore 2 million, but it's actually 1.4 million only. So again, just to reiterate, you can only buy TS or treasury shares up to the unrestricted retained earnings. So pag binigyan ko kayo ng example where I stated na may 3 million na total RE, 1 million is restricted, the answer would be 2 million yung unrestricted. That's the amount of portion that you can buy treasury shares. Now, in this particular example, 1.4 na lang yung allowed for you to be able to buy additional treasury shares for the next period. So, in the second half of capital stock, we will just focus on 3 major concepts. How do we acquire capital stock? How do we reissue capital stock? And how do we retire capital stock? Treasury shares pala, sorry. So, step 1, treasury shares, how do we acquire? Well, basically, the company can reacquire shares by either paying the shareholders in cash. So basically, they will debit treasury shares, credit cash, or they will issue non-cash consideration. So pwede nilang bigyan ng land yung particular shareholder. So that's gonna be a credit, and then they will debit treasury shares. What is the thing that you will notice? The treasury shares has a normal debit account. So it actually lessens your equity. So the more you buy treasury shares, the more it lessens your equity. Right? So let's look at an example. An entity reacquired 2,000 shares with par value at 100 at 150 per share. The major difference between common shares and treasury shares is that, diba, before, kanina, in the first set of examples, we use the par value. Unlike before, for treasury shares, we will always record them at cost or carrying amount of non-cash consideration. So, how do you value your treasury shares na debit? It's not the par value of 100, but it's the cost of 150 times 2,000 shares. So, you will have 300,000 treasury shares. It's 2,000 times 150, debit 3,000. And then credit cash. So yung treasury shares mo will be valued not at par, but at cost of the cash that was given. Same scenario kung land or non-cash consideration. So basically, binigyan ka ng carrying amount of 250,000, you ignore the par value for treasury shares, and you will have debit treasury shares, credit cash, this should be land, of 250,000 pesos. So, ano lang yung major point? For treasury share acquisition, you ignore par value. You will only look at the cost of the cash that was given or the carrying amount of the asset that has been provided. Now, the real reason why you want to buy treasury shares is so that you can actually reissue them either at cost, at more than cost, or less than cost. So again, para hindi tayo malito, general theory muna tayo. When you reissue the treasury shares at cost, basically what you'll be able to do is just get back the cash that you were able to pay them for, right? So this is simple lang, debit cash, credit treasury shares. Kapag na-reissue mo siya at more than what you paid for initially, you will now debit cash, credit TS, so parang technically parang same siya as your CS, pero this time it's at cost. And then anything that you can sell above the cost will be called share premium treasury share, or simply put, APEC TS. And then later, you will be, and then the last scenario is that, what if you sell them for less than the cost? Then, pag less than the cost, similar with share issuance cost, kapag may share premium ka ng TS, yun yung babawasan mo muna. Pero kung wala, straight to retained earnings. So, this slide, kapag nalilito kayo, just treat it the same similar way as your share issuance cost. Na, the idea lang is, if you sell anything that's less than cost, you will just do a two-step process. First is ask yourself, meron bang APEC TS? Kapag may APEC TS, you will debit that. Kung wala, straight to RE. Again, these slides look complicated, but it's easier to digest with examples. So, let's look at the scenario. So, kanina, we bought treasury shares at 300,000. So, again, sa treasury shares, so treasury shares na tayo. So, these are the types of shares that you reacquire from customers. You ignore par value and you look at the cost. So, the cost is 300,000. So, technically, it's 150 pesos per share. Now, you will have three scenarios. You can reissue the shares at cost, at more than cost, or less than cost. So, first is at cost. Pag nabenta mo siya at 150 per share, all you have to do is credit the TS at how much you bought it. So, 150 times 2,000, 300,000. And then you will debit cash at 300,000. Very straightforward. So, step 1, debit cash for the amount that you were able to sell it for. Step 2, credit your treasury shares at the cost per share that you were able to buy it from. And then that's how you journalize the M3. For if it's more than cost, right? Kuwari, yung 150 na na-buy back mo, nabenta mo siya for 200 shares per share, right? So now, again, similar journal entry, right? I-credit mo muna yung treasury shares at cost, so that's 150,000 times 2,000, so 300,000. Debit your cash at 400,000, which is the amount that you were able to raise from the selling of these treasury shares. And then the excess will be your APEC TS, which is 100,000. And then finally, the last step is you sold 100 per share. So now, again, reminder, you bought it for 150. Nabenta mo lang siya for 100. So what will happen will be, you will first credit your treasury shares at what you bought it, so 300,000. And then the cash, you will debit by the amount you received, which is 200,000. Meron kang missing debit. In this scenario, wala tayong APEC TS. So don't be confused by this slide. These are three separate scenarios. So in this third scenario, wala tayong APEC TS. So therefore, we will debit RE by the difference, which is 100,000. Right? And then, finally, just to give you another example, so ito yung base scenario natin, di ba? Walang APEC TS. Pero what if may binigay na additional given na? What if there is an APIC TS of 200,000? The only difference of how you'll journalize it would be rather than debiting your RE, you will just debit your APIC TS. So at this point, honestly, there's just a lot of nuances that you need to be able to understand and to digest. So what I recommend is that I already uploaded the PowerPoint. You redo them and understand for yourself na you'll eventually get na, okay, kapag common share, what I focus on is par value. And then anything above that will be share premium. For treasury shares, what I'll focus on is the cost that I was able to buy it from. Anything that's above that will be APIC TS. And then share issuance cost and selling less than cost has the same concept. Na what you just have to do is check, meron bang premium na I can deduct from? Kung meron, then I deduct the premium. Kung wala, then lessen your RE. So I suggest and I recommend that before you do the LEI, the problem set in Oble, to redo these exercises for mastery. So basically, the last step na is to retire. So the last thing is i-retire mo yung treasury share. What does that mean? The treasury share will no longer be sold. Ang gagawin mo is that babawasan mo na talaga yung capital stock mo by the amount of treasury share. Remember, your treasury share feels like an allowance on how you deduct the equity. Technically, never pa natin ginalaw si capital stock when we bought them. So ang gagawin mo now, when you retire them is, okay, I will derecognize my treasury shares, but in return, babawasan ko na officially si capital stock by debiting it. Now, di ba, the focus of the treasury shares is at cost. And then capital stock will always be at par. There will be moments na meron silang difference. Yung difference, you have another hierarchy of how you will debit everything. So how will this work? For the retirement of treasury shares, you just follow three major steps. Step 1, you debit your common stock at par value. Step 2, you credit treasury shares at cost. And then step 3, you will master or memorize the following. Pag meron kang kailangan na i-debit, una muna is you will debit your APIC or share premium from the original issuance. The second is the share premium from the reissuance of the shares. And then if ever there's excess, then that's retained earnings. So, again, in an example, it will look like this. So, the idea here is that meron kang capital stock at 5 million worth 50,000 shares. Nung in-issue mo siya, meron kang share premium of 500,000. And then, may 5,000 shares ka of treasury shares that you were able to buy at 750,000, so this is at cost. And then meron kang share premium of 100,000, and then may RE ka of 1 million. Now, the thing is, for this particular example, you want to retire the 750,000. You want to officially lessen your common stock by 5,000 shares. Right? So how do you do it? Step 1 is you credit your treasury shares. Credit treasury shares at cost. So this is 750,000. Step 2 is to debit common stock by the amount. So again, remember, 5,000 shares lang to, but this is 50,000 shares. So ilang percentage yung treasury shares? 5 divided by 50. So technically, you're retiring 10% of your capital stock. So meaning, 500,000 yung ita-debit mo sa CS. So this is at par. And then, ang ma-realize nyo is that because this is at cost or how much you bought it for, and this is at par, meron kayong missing debits, right? And yung missing debits, we will allocate based on the three hierarchy that was mentioned. So, how will that work? First is, meron kang APIC CS that's related to each of the shares. Pero hindi yung buong 500,000. We will only get 10% of this referring to the APIC CS for the 5,000 shares. So that would be 50,000. So the question is, nag-balance na ba? Hindi pa. This is 550 debit, this is 750 credit. So what else can we deduct? We will then deduct the debit of APIC TS. So again, you ask yourself, nag-balance na ba? 550 plus 100, this is 650,000, and this is 750,000. So may missing pang 100. Anything that's missing after you've debited your APIC CS and you've debited your APIC TS will go into your retained earnings at 100,000. And that's basically how you retire a common stock by using your treasury shares. So basically, that's the three things that we're gonna be doing. So honestly, treasury shares is the hardest for capital stock. And then pag na-master nyo na to, then that should be easy na for you in terms of the particular module. So now, just as a review, this will officially end our level 3 for shareholder equity. And then now, we can focus on the last component, which is retained earnings. So, in general, in level 3, meron ka lang namang 3 line items related to your capital stock. Your capital stock, your APIC CS, and your treasury shares. The last thing is your retained earnings. Your retained earnings actually is something that we're very familiar with. Remember your statement of owners changes in owner's equity. Yung retained earnings nyo is just basically your net income for the year and then adjusted by the following things. Now, it looks complicated, but honestly, I will not parang bother teaching prior period errors, changing an accounting policy, all the way to reclassification. The only kind of complexity I want you to master at would be dividends distribution. So, the idea here is that this is the level 4 and the final level of our shareholder equity. So, ito yung level 3 natin. Level 4 is just understanding how you arrive with your retained earnings. And retained earnings is just basically beginning retained earnings, add or subtract your net income or net loss, and then kindly remember that your dividends, so what are dividends? Dividends is the amount of money that the company gives to pay out its retained earnings. And that will be a subtraction so that you'll arrive with your ending RE. So dividends, again, means that these are what you provide your shareholders from. So there are 2 types of dividends, out of earnings and out of capital. Pero I will only teach you cash dividends and share dividends. So dividends. First thing is that you cannot issue dividends if there's a net loss. The idea here is this. Sobrang kumikita yung company, tumataas yung retained earnings natin that we want to reward our investors. So to reward them, we will issue dividends. In the same way that bond owners get interest, equity holders naman expect good dividends from companies. And in dividends, there are 3 particular dates lang that you need to be aware of. There is a declaration date. That's the amount or the time that we will authorize the release of the dividends. And kindly take note na ito yung pinaka-importanting date because this is where we value the liability of our dividends payable. Record date is just something good to know. That's when they finalize sino yung makaka-receive ng dividends. And then payment date is when you actually pay them. So, let's look at an example. So, for cash dividends, you have 2 types, peso per share or percentage of par. It's very intuitive. Pero, let's look at this example. Nag-declare ka ng dividends December 31, nag-record ka Jan 31, and pay ka ng March 31. So, how will we go about it? Sa declaration date, it said na there are 20,000 shares issued and outstanding. Major concept number 1 sa dividends. Only stocks that are issued and outstanding will be able to receive the dividends on the declaration date. So, 20,000 times 20 peso per share dividends, you will recognize a subtraction from your retained earnings at 400,000 and dividend payable of 400,000. So, sa declaration date pa lang, nabawasan nyo na yung retained earnings. And then you'll have another date called record date, wala kang entry dyan. And then payment date, that's when you finally pay the dividends. So, ano lang yung importante here? The reduction in retained earnings will happen on the declaration date. The record date is something that you ignore, and then the payment date is just as the name suggests, when you pay for the dividends. And then finally, the last topic is stock dividends. Stock dividends, the idea lang here is that rather than rewarding them by giving them money, you will reward them by giving them more shares and more ownerships. So that, pag nag-issue ka ng dividends, mas mataas yung ownership nila. So basically, this is just a transfer of RE to your share capital. So, the concept lang here would be, how do you value your stock dividends? Just know that you have two types of stock dividends. If it's less than 20%, you call that the small share dividends. If it's 20% and above, it's large share dividends. You will use fair value on the declaration date pag small share and par value kapag large share. So, to operationalize this, let's look at the example. You issued 2,000 shares, 20% share dividend. So first question is this a large or small share dividends? Large, kasi 20% and above, right? So this is large. So you will value it at par. So how will that go? On the declaration date, you will multiply 2,000 by 100. So that would be the reduction in RE. Sa record date, you will not ignore. And then sa payment date, you will then issue that. Pero ano yung difference? Sa stock dividends, rather than crediting cash, you're crediting CS. Another example will be, paano kung it's less than 20%, right? So, sorry, nagkamali lang. This should be 19%. But the idea here is, RE, 300,000, credit share dividends payable, and then APEX CS. So you multiply the 2,000 shares by 150. So that's how you get 300,000. Share dividend payable of 200,000, and then APEX CS of 100,000. And then you basically just issue the dividend payable upon credit stock. So basically, that's your small share dividend and large share dividend, which I think we can discuss pa during our problem set. But generally, that's the whole quiz or the module, right? So capital stock, retained earnings will be equal to your total shareholder equity. Again, it looks complicated when you're just parang absorbing it for the first time. Pero when you do the exercises from the lectures and the problem sets, you'll be able to realize that equity is actually very intuitive with the concept of share premiums in common stock and treasury.